Hello and welcome to Livewire C-Suite coverage for reporting season. I'm Sarah Allen and today I'm joined by Andrew Goodwin. Andrew is the CEO from Wisr. Wisr's just announced it's hit profitability for the first time. Andrew, welcome.
Thanks, Sarah. Good to be here.
So to begin with, for those who aren't in the know, can you describe Wisr and what makes it unique in the Australian fintech space?
Absolutely. So since 2017, we've been building a business based on financial wellness. We've always been driven by that purpose, and we've now developed a Wisr platform that's a consolidated one-stop shop for customers to come and do things like take loans out. So we have a personal loan product and a secured vehicle loan product, which we distribute through 3 key channels. Alongside that, we have a whole range of tools and products, including credit score checks, roundup tools, what we call smart moves, which is a whole range of things you can do to improve your finances and so on. And they're for both loan and non-loan customers, and they all combine into the Wisr app, which is our, as I said, one-stop shop platform. And really what we've created is a sticky environment to retain customers. And it's not just about the lending experience, it's about the whole financial journey of a customer. And so we're really focused on long-term relationships with them.
Okay, fantastic. So turning now to your results, and you've just announced that you've hit EBITDA profitability for the first time. Congratulations.
Thank you.
So can you talk us through some of the key results that investors should be aware of?
Yeah, absolutely. As you rightly called out, very excited to hit the EBITDA profitability for the half. So we did grow revenue by 11% and we reduced OPEX by 26%. So that operational leverage is really what drove that outcome for us. The other thing we've done over the last 12 to 18 months, given the rate environment that we've found ourselves in, is recalibrate the business around basically our front book yield and NIM. And so those rates at which we sort of charge in our loans and the return that we make. And we've managed to get that to a run rate point where once we do choose to recommence scaling, which we're looking to do very soon, we'll be very well placed from a loan unit economics perspective. At the same time, we've enhanced user engagement on our Wisr app. So that includes an award we actually received from WeMoney for Best Mobile Experience in 2024. So that was fantastic. And that's, as I said, for loan and non-loan customers. So things like rate estimates, paying off debts quicker, the roundup tool. There's a whole range of tools and products there for customers to use.
Okay. Now you've had a lot of challenges for the management team and the board in the past year. What work is Wisr doing to reinstill confidence?
Yeah, look, it's been a tumultuous year on many levels, and certainly the markets we've found ourselves in have been very challenging as well. So obviously I was very humbled to be promoted to the role of CEO back in August. I've been with the business for sort of 7 years, essentially since inception. I was CFO previously, and my colleague who was on the results call this morning, Joanne Edwards, has been with the business for about 4 years, and she was promoted to Chief Operating Officer. She was formerly Chief Risk and Data Officer, so she has a real risk and data mindset. Which is, I think, fantastic for this stage of our business, and obviously myself with more of a financial background. So I think there's great longevity in the leadership team. We obviously also have the new chair, who was formerly a NED. We're really engaged with the market, so with our shareholders, with our funding partners, and importantly with our customers and staff, to make sure that we're doing all that we can to excel in whatever sort of facet of that relationship we're delivering. So on the staff piece, we do very regular sort of engagement surveys and that whole piece to ensure that the staff piece is going well. The relationships with funding partners, I think, is evidenced through the ABS transaction we did in December. We did a $200 million rated Moody's ABS transaction in December, again, which is a good indicator of where the business is at. So the job isn't done. I think there's really no finish line for ongoing stakeholder engagement, but I think we've really turned things around from, yeah, as you say, what was a challenging sort of 12 months or so, to obviously be in a great position, obviously a profitable half, and looking to recommence growth.
Okay, well, it's quite an innovative product, Wisr. So how do you balance that with Australia's quite rigorous regulatory environment?
Yeah, look, compliance with regulation is critical, and that's something we've always prided ourselves on, both from a lending perspective and also the tools and products that we provide on the financial wellness platform more broadly. So I think they solve for each other in many ways. So before we do look to innovate or launch a product, first, we are cognizant of the regulatory environment that we're operating within. Protection of customers and their data is paramount. We take that extremely seriously. We do a whole range of sort of closed sandbox testing on any new innovation that we want to bring out. Obviously, ongoing engagement with regulators, ASIC, APRA, and so on, and being across any new or focus points for them is critical. And so again, it's one of those things. It's an ongoing journey. There is no finish line for that either, and we remain, extremely cognizant of that.
So how has the inflationary environment shifted your loans portfolio in the past few years, and where are you seeing the greatest growth going forward?
Yeah, so I think inflation had a couple of impacts on our business. So number one, obviously it increased interest rates. And so what that did, there was obviously concern, and it remains a focus of cost of living pressures for our borrowing customers. So that's sort of number one. And number two was the interest rate at which we, obviously pay on our funding that we use to fund loans went up materially. And so we really had to recalibrate the business to, I guess, claw back those funding cost increases that we went through. And so what we've done in that inflationary respect is we have increased the rate at which we charge on our loans, on new loans. Historical loans are all fixed. And getting that NIM or net interest margin back to a level where we think is very scalable to regrow again.
And what's in the pipeline for the coming year for Wisar?
Yeah, I think the big message that we put out there today, again, subject to market conditions and so on, is to recommence growth. So we have been through a deliberate moderation of loan volumes. So for around 5 years, we were high growth, sort of pre-profit business. We're now a moderated growth, profitable business, and now we want to be both. So we do want to grow again in a very measured, sensible way and grow profitability ultimately. So we did call out in our results that H2 is when we intend to do that, which is obviously very exciting for the business, for the market, and so on, and we're definitely looking forward to do that. We want to continue to develop that, that non-loan component of the business, so those tools and products that we offer our customers for their financial wellness and for their consumer finance journey, which, as I said, we've seek to sort of reimagine and will continue to do so.
Fantastic. So a big year ahead.
Absolutely.
Well, thank you so much for joining us today, Andrew.
Thanks, Sarah. It's been my pleasure.
If you've enjoyed this interview, please subscribe to Market Index and Livewire Markets for more of our reporting coverage. Thank you for watching.